Brian Bunker, Managing Director for Asia Strategy with Riverside. You're based in Hong Kong. Yours is a private equity firm with $4 billion under management, but your company is looking at investments within North America, Europe, Asia. But within Asia, where are you primarily looking these days?
Our focus in Asia is doing leverage buyouts in the developed industrialized markets of Japan, Korea, Australia, and to a certain extent in Hong Kong, Taiwan, and Singapore.
In the private equity conference here at INSEAD, you had a case study involving a Korean company and some of the trials and tribulations linked to that. Mm-hmm. Was that a typical case or atypical? There seem to be factors where you said this was no different to being in Europe.
Riverside's business model is we acquire companies with EBITDA between 2 to 15 million US, usually family owned. And what we like to do is back a good management team with a view to growing those companies, holding them for 5 to 7 years, and then exiting. Now, during the hold period, on average, we end up changing the CFO and the CEO about 50% of the time. And some of that is a planned, managed transition. But sometimes things do go wrong, so there's a clear lesson there to expect the unexpected. And in this particular case, I outlined the issues that we faced with an acquisition of a Korean company, where we felt that there was a difference in expectations between us as investors and also the founder CEO, which resulted in a transition. One of the issues was an inability to drive growth and a clear feeling on the part of the CEO that the business was getting a bit too big for his capabilities. So when we executed the transition, he actually said that he was relieved. He understood that the business needed somebody else to drive it forward with a greater breadth of experience. And the interesting thing was that despite the fact that this was a very Korean company, we often hear exactly the same feeling when we execute transitions in North America and Europe.
Is that something you do as a last resort, or is this something that you're thinking of right at the beginning of your investment in a company? Because presumably, if you take out the founder or the entrepreneur who's been closely linked with a company, it could create a void within the company.
Yes, initially we do an assessment of management teams, and we like to back good management teams because those are the guys that are going to have to execute the growth strategy and take the business from where it is today to where we want it to be in 5 to 7 years. But when one does the assessment, obviously you cannot take into account every factor, and sometimes it doesn't work out, which was my point. You have to expect the unexpected. So how do you mitigate that? One way is to make sure that there is good bench strength within the organization. So if the CEO or the CFO doesn't work out, then the organization as a whole has the ability to carry on during the interim. The other way is to have good outside board directors and experienced operators on the board, so that you can monitor the company very closely, and when things are not on track, you can then make the tough decisions and do what's necessary. But coming back to your earlier question, Stuart, it's very much an action of last resort. We work with the management teams. We like to advise through the vehicle of the board, and also where necessary, as in this case, arrange coaching. And if things are not improving, then we have an obligation to our investors to make the tough decision and handle that as sensitively as possible to minimize any business disruption.
Why is it that you're focusing on developed Asia more than China and India? You're not touching China and India. When we were at Super Return Asia in Hong Kong, China and India were the hot markets, and people were backing off from developed Asia. Why then are you not looking at China and India?
A couple of reasons. Riverside only does leverage buyouts, so we do control deals. In both China and India, we are seeing very little deal flow of good buyout opportunities. Most of the activity is in growth equity, which is a separate sector which we don't delve in. In addition to that, we have a model that's been very successful in North America and Europe, buying small businesses, usually from family owners, and then growing them. Due to the demographics in Australia, Japan, Korea, we see many small and mid-sized family businesses where perhaps the owner-operator may have succession problems. Maybe his children are off becoming professionals. We came across one recently where the kids were in Canada. One was a doctor, one was an investment banker, and they didn't want to run the family business. So we see quite a lot of opportunities like that due to demographics, baby boomers moving through the demographic cycle, which you don't see in China. China, with the great Kaifeng, the opening, only occurred 20 years ago. So people who were in their early 30s then, who set up businesses, are now still relatively young, in their late 40s, early 50s, and do not yet feel the need to cash out. In addition, there's such a vibrant stock market, especially with the opening of the secondary stock market in Shenzhen, that the main focus of owner entrepreneurs we're finding in China is to go the IPO route rather than to sell to somebody like ourselves.
And so you wouldn't be interested in the IPO route per se?
In Riverside's 22-year history, we've only done one IPO, which was for regulatory reasons in Poland. 50% of the time we sell to other private equity groups, financial buyers. 50% of the time we sell to strategics within the same industry.
And within the company as a whole, do you see the weighting towards Asia changing in the next 5 years?
Definitely, Asia is one of the legs of our tripos. Riverside was originally a North American fund, North American focused, and then expanded into Europe in the late 1990s. And Europe now has somewhere in the region of 20 operating companies out of the total portfolio of 73. In Asia we have 5 operating companies, and the intention is over the next 10 years to grow Asia so that eventually there'll be more of an equal balancing of a third between North America, Europe and Asia.
Brian Bunker of Riverside, thanks a lot.
Thank you, Stuart.